Hi, everyone. Welcome to the April edition of Wallet Max Planet Positive podcast as we get into the second quarter of 2025 after a rocky Q1. I'm Bhuva Shakti, based in New York, and the founder of Wallet Max. We are a global community of startups, investors, and more importantly, executives that are focused on increasing fundraising access for women, especially in the climate tech, sustainability, fintech, deep tech, and AI sectors. We interview one impact investor every month for our podcast to share their background and what differentiates them from the crowd in terms of prioritizing impact along with profits and planet. We deep dive into their personal and professional journey and their mission to uplift. Today, we are speaking with Ashley, a long term investor and a big supporter of diverse teams and initiatives. Ashley is a partner at VamosVentures, a venture capital fund investing in founders across health and wellness, fintech, future of work, and sustainability. Ashley was previously an investor at Brand Foundry Ventures, Founders Factory, and Dorm Room Fund across commerce, health and wellness, and fintech. Let me now hand over to Ashley and invite her to say a few words about her background and career path. Over to you, Ashley.
Thank you so much for the time, and again, thank you for this podcast. It's great to focus on impact. That is what we care about at VamosVentures. So I'm really happy to be here. Just really quickly, my background has a lot of zigzags, and I think you find that a lot of investors have a lot of zigzags in their career. What makes the venture capital space so interesting. I graduated from Brown. I thought I wanted to be a lawyer or investment banker while I was at Brown because I came from a non-traditional background. My mom worked at the United States Postal Service as a clerk. My father was a building porter around New York City. My mom's Puerto Rican. My dad's Turkish immigrant. And so they always pushed, going into finance or going into law. But at Brown, I got very involved in sort of everything entrepreneurial and led the Brown Entrepreneurship Program. I founded an organization on campus called Lady Launchers, really, promoting women entrepreneurship. But because, they really sort of pushed that brand name on my resume after school, I went to work at Morgan Stanley. It was a really wonderful experience actually as a stepping stone in my career. I was on a capital markets desk covering consumer and tech public equities. I learned about markets. I learned about storytelling. But again, that entrepreneurial bug kept coming, was still in me. And after a few years at Morgan Stanley, I went to join a Y Combinator e-commerce startup called shopteeks.com. I did everything there from, pounding the phones to sell the product,
Yeah.
looking at investor decks and whatnot, and thinking about, how best to promote the product. And what it was building digital storefronts for mom and pop boutiques. These were the early, days of what came to be as everyone was getting into commerce and trying to sell online, even small and medium sized businesses and shops. And so they were sort of at the forefront of it. And then after that, I got tapped on the shoulder to buy and build technology and think about, technological strategy at Estee Lauder and Saks Fifth Avenue, meeting the consumers where they were at with technology. So virtual beauty, buy online, pick up in store, omni-channel initiatives. So, I think my career always spanned across technology, finance, strategy. And then only when I got to business school at MIT Sloan was when I started thinking, well, what's the mix of all these different things? And that's when I started, to think about investing. And so I worked at a few different funds, but realized, going back to the impact piece, that a lot of entrepreneurs weren't getting funded. And a lot of these entrepreneurs had backgrounds similar to mine, right? Um,
Yeah.
they were Latina, immigrant, women. And the light on my head went off, and I said, I really want to be in a capital allocator seat where I could allocate capital to these founders that are often overlooked. It's a really big business opportunity. And so I met Marcos Gonzalez, who's the founder managing partner of VamosVentures, and the rest is history. I've been there ever since, pushing this effort. And what Vamos really cares about, going back to what we were talking about earlier, is impact and returns. We're true believers
Yes.
in that you could have both at the same time. And impact to us means many different things. Diversity is a pretty broad definition for us. It's pretty much anyone who's overlooked and underserved by traditional venture capital dollars. So when we invest, we have to have at least one co-founder with that ownership, a significant amount of ownership, who's on the founding team. And then also it trickles down to different things like job creation. How many, third-party contractors are you hiring who identify as diverse? Health outcomes, thinking about sustainability outcomes. So we really are true believers in that, you could build $1 billion tech business, but also, show for these types of metrics. And I'm really passionate about it, and that's what I spend a lot of my time on, even outside of VamosVentures.
No, that's true. So I've had a long career on Wall Street myself in the investment banking sector, which is where I landed as usual. But then over time, I also realized that there are overlooked sectors, but then I don't want to run around profit. So why should prioritizing impact and inclusion and sustainability be a nonprofit? So my goal is to also talk to investors like yourself to prove to the world that impact can coexist with profits and we can be inclusive, right? So that's a great mission that you have. Now, what's your secret sauce? So what's your unique qualification or passion that has caused you to get into specifically impact and profit-oriented ventures? So what's a pivotal moment in your life that led you here?
Oh my gosh, there were so many, but going way back when to even before I got into Brown and that entrepreneurial journey started for me, I used to remember when I was a little girl, my dad in particular used to sit me down and make me read the Wall Street Journal uh, and learn about all these, tech companies and big businesses. And then he used to also sit me down and say, hey, watch the show on CNBC called The Big Idea with Donnie Deutsch. And all of these different founders, whether they were, high flying tech founders to lifestyle founders, it was all about starting something to accomplish the American dream. And I remember listening to all those stories and being so inspired and saying, you know what, like being from the background that I am, like things are possible. And so that's why I think the power of storytelling and, having that storytelling happen so early on to say and have people believe that these paths are realistic for them and that they can go out and get that American dream, right? It is really important. So that was a really pivotal moment or moments in my life, spending time with my dad thinking about that type of stuff and learning. I would say the secret sauce is, and it had to be this way since I was younger, is scrappiness and resourcefulness.
Nice.
I think when I was in high school, I was part of the first graduating class in my high school. It was the CSI High School for International Studies, 80 kids in my class. I was like, let me take a leap and do this thing. Being part of the first graduating class, I had to figure out how to apply to college and how to even think about the college application process myself. But I did it. I sought out mentors. I, sought out people who went to the schools that I wanted to go to learn about their journeys. Going back to trying to get into venture, the scrappiness came back with doing the job before I got the job. And so I would reach out to founders and learn about their stories. I would say, hey, I have a finance background. I'm happy to help you with your model, right? I've seen a couple of decks before. I'm happy to think about your fundraising strategy and review your deck. And that was really value add to them being early stage founders. And that really helped me to provide sort of a bunch of examples when I was talking to venture capitalists trying to recruit, right, as I was graduating. So it is that resourcefulness and scrappiness, and especially at an emerging fund, you kind of have to be doing both. You have to invest, but you're also building, your firm building, your fund building. You're thinking about strategy. You're thinking about portfolio allocation, right? And so a lot of it's building and investing at the same time. And that's where the resourcefulness and scrappiness come in handy.
No, totally agreed. Especially when you're talking to an investor from a founder perspective, if they are aware of the nitty-gritty of everything, then you are a founder who's comfortable to work with that investor, or else most of your time is spent in explaining to the investor what and how, because if they are coming from a finance background. So that's good to have a wide variety of skills. And also, I think you're going to learn by doing so, helping other founders is really key in also establishing your career. So totally agreed with those. I've seen those examples so many times in life, and those are like successful investors, and also founder investor fit is great in that scenario. But one question I want to follow up there is, so why do you think venture capital is the sector for you to make a difference in investing in diverse teams or founders? So why not something else? Why specifically venture capital?
I think, what excites me, and we're going through a crazy time in the market right now, right, with the tariffs and just a bunch of things that happened recently.
Yeah,
I think that there's always going to be tech innovation, right? Technology is always going to be there. It's always going to advance society. Sometimes in really great ways and other times in really scary ways, but it'll always be there. And so I think this focus on diverse founders in the technological setting in venture capital is a largely untapped opportunity. I think about the Latino, Latinx population in the United States in particular. There's never been, it used to be several years ago that, STEM degree attainment, for example, was in the low single digits. Now it's in the double digits, right? And so more
yeah,
people are starting to get, more diverse folks are starting to get interested in STEM and building technology, right? Population growth is something to notice, right? And that the Latino population is going to be 30+% of the population in the United States in a few short years. There are going to be a bunch of founders in that population. These founders hold trillions of dollars, right, of spending and buying power. But only less than 2% of venture capital dollars goes to these founders. And so there's a really interesting and, unfortunate, I think, disconnect, but that creates a market opportunity, right? It's similar to public markets, right? There's a really interesting opportunity, right? That no one else sees, and that's how a hedge fund makes a lot of money. I think in venture capital you have the same thing, but with this demographic focus. Also, returns in that there's a bunch of stats out there that diverse founding teams deliver better returns, right? That could be again in the public market setting, that can be in the private market setting. I think I forget who exactly, it might have been McKinsey that delivered this report, but it's about 4 times better of a return, right, than more traditional founders. And the last thing is these founders are creating a positive feedback loop, and this is something that VamosVentures is really, and myself are really excited about. When you back founders, diverse or not, what's happening is if they're successful and you're supporting them along the way and they have this major exit, a lot of that money and wealth and power then get funneled back into the communities that they're from or that they care about. And so it's such a wonderful life cycle of Ashley, this high-flying tech founder. She sold her company for, millions of dollars. She's now sitting on a bunch of wealth that can then get distributed to funding STEM degree programs for diverse founders, to investing in 5 other diverse founders in their technological journeys, and in their startup journeys. It could go to, educating young women on, what is a venture capital job. And so that is why I think the venture capital opportunity, the diverse opportunity in venture capital and startups is so important, and why it will create a lot of wealth, I think, for a lot of people.
yeah, no, definitely. So a couple of things come to my mind. Number one, like you said, less than 2% capital goes to women, and especially women of color, underrepresented communities. It's much less. And after the pandemic, and that was the trend before the pandemic, and it has not improved after the pandemic, right? So it's been 5 years now. And secondly, also, you rightly said, where trillions of dollars in wealth is going to be transferred to the next generation of women in the next decade. That's like about, I think, $80+ trillion. So the next generation is going to be mostly women, and they are going to be the decision makers. By default, they choose impact and inclusion. So which means their focus is the solution itself rather than focusing on other attributes. And you're right with the report where they do comprehensive due diligence, right? So women typically are more proactive in risk management and also doing comprehensive diligence, which essentially puts them into better performing ventures. So totally agreed on all those fronts. So with these opportunities there ahead of us, where do you see the challenges? So I'd like to see more so the geographical focus area, right? So you're based in New York, let's say between New York, San Francisco, and within the US sectors, as well as rest of the world. Let's consider UK, Europe, and rest of the world. With so many opportunities there, we still have quite a lot of challenges. So where do you see the most challenge for the opportunities we see across these two sectors of markets, US and non-US?
I think it's building community and a support system for these entrepreneurs. I'll never forget about 2 years ago when we first really started, hosting events and, getting out there. It might have been 2 or 3 years ago, in these different ecosystems. There was an event that we hosted for about 30 Latino founders in New York, and we get there and everyone's like, well, we don't know each other. Like, how do we not know each other? I mean, New York's a big place, right? New York's a big place, so it
Yeah,
could very well be that they did not know each other. But it was so, and these were high flying, high profile tech founders. I was so curious why they've never gotten together or knew each other or talked to each other. And so I think that is a big opportunity and it's a big challenge. It's getting to know everyone, right, in the space. It's getting to know everyone who also cares about this, everyone who identifies. So there's different layers to that. And then bring them in one room to knowledge share, to help each other, to say, hey, that investor is a really great investor. That investor you might want to avoid, right? Or I built my company this way. You might want to have these considerations as you build your company. And so it's that getting together and knowledge sharing. And that happens in the US and that happens, I think, globally in that there's only so much time in the day as an investor or as a person to like you put on a bunch of events, right? But I think if we have different stakeholders, and I don't just mean like in the private sector, I mean in the public sector, worrying
yeah.
about and caring about, right, these types of initiatives and getting folks together to storytell, to knowledge share, I think we'd be in a really great place. I think it'll advance a lot of conversations. And that's the other thing too. I think there needs to be more collaboration between private and public sector. I think about a lot of the great work that the state of New Jersey, right, is doing in bringing private companies and a lot of the government entities together to say, hey, we want to make New Jersey as a state an innovation hub, right? We want all the great biotech to come out of this. We want all of the great FinTech to come out of this state. We want to make sure that we're looking at areas that other VCs or other investors, other stakeholders aren't looking. And that doesn't mean, a Jersey City or Hoboken, right? Really popular places in Jersey, but that may mean going to sort of the outskirts and seeing what tech innovation is happening there, or going to, you know, outside of Rutgers University, right? To see what talent is coming out of these types of schools in New Jersey. And so it's a wonderful example of maybe a more non-traditional venture and startup ecosystem really coming together to help founders or, help people maybe not even thinking about companies start thinking about, hey, I want to build a big tech business, right? Or I want to work at a startup, or I want to become an investor. So I think those are the two challenges. It's community and ecosystem building and constantly pushing to that and supporting people who are interested in this stuff. And the second thing is public and private coming together to encourage and help with innovation.
Oh, that's perfect. So last Thursday, I was at an event in New York City where they were bringing founders and investors together. It's a mix of four sectors. And there were like 20 founders and 20 investors. Hardly two of them knew each other. And all of us are in New York City for
Yeah,
so long. So very, very much agreed with that point. Even though we are in the same location, we don't know each other quite a lot. It's good to meet each other as a community. But then you mentioned public-private partnerships. So let us say up until last year, there was heavy emphasis on that. We trusted that we had no issues that there will be a private-public partnership or not, because we knew it's going to happen, because large-scale investments are going to scale only with the support of private and public sector coming together, and also with the support of the government sector, like you mentioned in New Jersey. But then the current political landscape within US and globally, you can see a lot of big corporations and even private investors are shifting priorities, at least in the public facing world. I don't know what's happening in the private internal organization, but within this situation, why do you think investing in fintech, deep tech diversity is important for the long term? So we will have challenges in public-private partnerships.
sure.
We are going to have a very rocky economical system, at least in the near term. Do you still believe investing in fintech, deep tech, diversity, and other sectors is important today for the long term?
Absolutely. Again, going back to it being a big business opportunity, I mean, that's a given. I think by 2045, the US will be a majority minority country, right? And so, again, if you're not paying attention to these demographic shifts, you're going to miss the boat with, investing. And the industries that you mentioned are evolving rapidly. If you don't have diverse thought, diverse opinion, a diverse way of building those types of businesses, AI, FinTech, healthcare, climate, you're going to miss the boat. I think about, for example, like talking tactically, there's so many people of color living next to Superfund sites in the United States.
Yeah.
They
Mhm.
are firsthand experiencing what, pollution and being detrimental to the environment can how it can affect households, right? And health and wellness.
Yeah.
And
Yeah.
those people are very informed as to how they want a better world and better future and more sustainable and better climate, right? And those are the builders that I would want to put my money behind because they have that lived experience. So I think, yes, it's still very important across all those key areas. And, diversity spans not only, with demographic and background, but again, thought, your lived experience, maybe your work experience, how you've had your own journey. And I think that's what makes this space so beautiful is that you're investing in individuals that have experienced things in their lives that made them so passionate to be crazy enough to go out and build something, right? These are all the areas that we're focused on at Vamos. When you mentioned earlier, we do healthcare, fintech, future of work, climate. It's because yes, we see that these markets are they have a lot of white space. They're extremely fragmented. A lot of them have, archaic solutions. And so that's where the tech innovation is really exciting to us. But they're also spaces in which individuals can create immense impact, right? In healthcare, for example, we said very expensive space. The system is broken in the United States. That's given. So, we know that there could be tech innovation that helps with that. But going layers deeper, how do we focus on communities that are often overlooked and underserved in healthcare? And we started noticing that, for the Latino population, for example, 1 in 2 Latinos over the course of their lifetime will develop diabetes, right? There's a huge uninsured problem, right, in the United States with communities of color. So how do we invest in solutions that create more affordable, accessible healthcare and more culturally competent healthcare, given that, right, there's a lot of, again, people of color with terrible healthcare experiences, to build really big businesses that help millions of Americans, right, and growing. So, there are elements of, I can get into more, fintech and some of our other areas, but just as an example with healthcare, right, again, big space, extremely fragmented, very expensive, trickle down to, millions of people and communities of color that we could build better healthcare for through tech innovation.
No, that's totally true. Like you mentioned, climate and sustainability, it's not about the planet, people's health and
Yeah,
well-being is being affected. So once you are not able to take care of people on the planet, what's the point of profits is what I keep telling.
right.
And you rightly mentioned, so when it comes to 2045, we are going to be a majority minority population and bringing diverse thoughts are critical. But then with so many priorities and opportunities going on, what are some focused areas that you personally invest or Vamos Ventures is personally invested in? How
Yeah.
has success been for you? Without sharing sensitive information, is there any case study or examples of companies that have, at least been on the trajectory of this kind of systemic change?
Yeah. Well, we have really great numbers to support our portfolio, and a lot of subsequent rounds that they raise have mostly been up rounds. And that comes to show you that again, like this investing and impacting returns thesis is really working out. And we're building a bigger fund. We're moving from fund 1 to fund 2 now to continue to prove out that thesis. And our pipeline's growing 70+% year over year. So the demand is there and the founders are there. Um, I look at our healthcare thesis, just going back to it, and chronic conditions and more
Mhm.
affordable and accessible healthcare are part of the verticals in healthcare. And so we invested in a company called Kalina Health. They're a telenutrition platform that puts registered dietitians at the center of care. And what Kalina Health is doing is they're thinking about more culturally competent care. And so a lot of the registered dietitians, RDs, right, come from backgrounds that are, thinking about it's not just, right, a rich person who cares about their relationship with food. It is a Latino who wants to eat rice and beans, who doesn't know how to lose weight. And so that cultural competency is really important at the center of this care model. They're doing extremely, extremely well. They're growing, exponentially. And they're one of the only I think the only telenutrition platform with a payer on their cap table. And they track impact metrics. And for those interested who are listening, you're going to go to kalinahealth.com and look at their impact report. They do an impact report every year on a lot of their health outcomes. So I'd pay attention to that. Another company in the portfolio, because we have FinTech as well and more, better wealth generation, more financial wellness, empowering both small and medium-sized businesses to build and grow and create wealth, but also individuals. Ocho, that provides more affordable car insurance, right? And so it's zero down payment, credit score building, you have a bunch of coverage options, there's no hidden fees, and it is focused on Latino and diverse communities and speaking to them in a more culturally competent manner. And James is he's a deep operator. He's a multiple times founder. One of his companies went public. He knows this space and he loves building with that cultural angle in the fintech space. And so backing these founders, both James and Vanessa and Tamara at Kalina, who are like, hey, these were our lived experiences. We get these communities. We want to build with them in mind. That's something really important at Vamos. So those are two examples of some companies in our healthcare and fintech thesis. And there's a lot more that we're going to look at now that we're building a bigger fund.
That's really perfect because I'm from a community of color as well. So you can't have one size fits all nutrition recommendation. You have to be culturally sensitive and match the lifestyle. So it's long standing, right? So you can't just have a one-time fact and then leave it there. And you rightly mentioned the impact metrics and impact report. So I talked to quite a few founders and investors myself around that, right? So if you have financial metrics, you should have a second projection or a slide, definitely before the appendix section of the deck as to how it is going to impact, right? So some investors I've seen that, okay, so put the impact slides in the appendix. That's not important. I need to focus on the financial projection. So those are not thinking long-term and also sustainable in terms of people and profits, right? So because it's going to impact the bottom line if you take care of it. And you rightly also mentioned financial wellness. FinTech need not be just developing a tech product and managing money, but inclusion and wellness, taking care of people is part of a FinTech revolution as well. So I'm very well aligned with those. So in terms of impact metrics, want to a little bit discuss on that. So do you have a standard in terms of from your fund recommend to your startups as to how they should potentially track or report? Or is that something the startups come up with? Do you kind of advise them around that? So is there a standard for your fund itself that you should track that for every startup in your portfolio?
We publish, and this is only internal. I wish I could share because it's such a great report, but it's only for our LPs. We do have a impact report that we publish annually. What we send to the startups is a simple Excel tracking things like diversity of board, diversity of employees, diversity of third-party contractors. What else do? We geographic diversity in terms of customers. So are you only serving the coast, or are you going between and taking a look at and serving communities that are overlooked, right? And geographies that are overlooked. And then we think about job creation as well, which I think is a wonderful stat to, just teach any startup to track, right? How many jobs are you creating that are getting filled by women, people of color, right? And so we report on all these metrics. Now, what this next iteration of VamosVentures impact reporting will look like, because now we have more longitudinal data, is health outcomes and other types of outcomes that get very, granular and specific as to how are the products affecting general society and these things that we care about. But as of now, those are the types of metrics that we track. We do say when a company's onboarded, and even before a company's onboarded, like, hey, these impact metrics are really important, not only to the fund, but to our different stakeholders. And naturally, I can't name a case of one of our companies being like, that's not important to me, I'm not going to report on it. Even the larger companies and later stage companies that we have in the portfolio make the extra effort to report these metrics. And by the way, it's all self-reported, right? We can't require that someone asks about a person's identity, but it's all self-reported, self-directed. But it's a really wonderful conversation that we have with our portfolio companies, because to your point, sometimes it brings out, hey, I realize that I'm not hiring, enough women at this
Yeah.
company. And so think about ways to, hey, VamosVentures, can you help me try to source both non-technical and technical talent from amazing women communities, right? And that's where we can come in and step in as a value add. I'm proud to say on the job creation front, our companies and our portfolio created over 900 jobs. I think 60+% of which were filled by diverse talent, right? And so that's kind of one of our secret sauces as well. It's pooling from different communities where these companies can say, I'm recruiting amazing and top tier diverse talent.
That's perfect, because we have to start somewhere. It may not be a perfect impact report, but then the goal is to get started somewhere. And also, many investors and founders think you have to think of a brand new strategy, think of a new system to start doing this in a year or two. But then you can start small with the data you already have and then build on top of it. So that's a great thing that you encourage your founders to do that. So with all this financial and impact metrics happening, so many challenges, but you also see opportunities, you have success in investing. But there are regulations that have to be considered, right? So you are in a heavily regulated sector, for example, FinTech, healthcare, and so on and so forth. So how do you balance regulations with these? And do they help or hurt your thesis? What can you share about that?
We always have a pulse on what's going on in our different industries. And the way that we approach it at VamosVentures is everyone's a generalist at the core, but we each have our specific focus areas. This is where I think, going back to secret sauce of the fund and our value add, being former operators has really helped us, because we've all experienced regulation or stuff hitting the fan and being disastrous at the time, but us working through different things, right? I mean, if you're a founder or startup team and you don't hit a roadblock every day, like there's something up with that, right? Like you have to hit a bunch of
Yeah.
roadblocks to build. So this is where the operating experience comes in. We have Andres on our team, who has been a fintech operator. He's gone deep into the space. He's built companies and has helped funds, right, really scale up. And so when a fintech company, for example, says, hey, there's a new regulation that we don't, know how to navigate, Andres comes in and, given his 30+ years of experience in the space, says that this is what we've done. This is what we did back in the day, or back in my time at a startup. And here's my recommendations. And so we get very sort of granular with our founders and talk through business strategy and these roadblocks. Listen, I think, on the regulatory side, and it's happening even in healthcare, right, with like cuts to Medicaid and federal funding, uh, you just have to be on top of the pulse. You have to be willing to adapt your business
Yeah.
model. That's something we look at very carefully with our founders, is prior experience adapting and pivoting based on the circumstances. And we have to do that as a fund too, right? In thinking about our theses and what the current environment and how it affects our thesis areas and specific verticals. So bottom line is, we're staying on top of it. We're guiding founders through it. If there's a roadblock that can't be crossed, then, that's a tough conversation we have to have, of like, hey, you might want to change your focus to this or pivot to this. And, again, it's going back to being adaptable. That's the most important thing.
No, definitely. So you may invest in a founder today, but let us say in a year or two, the technology may become obsolete or something else is more critical in terms of the emerging trend and so on and so forth. So you are investing predominantly in the founder and the founding team so that they are well positioned to pivot and operate and execute and scale along with you. So I think the founder investor fit is really critical also. Now with this, I mean, we've spoken about a lot of things going on, but there should be some kind of emerging trends that you foresee, because as an investor, you're always forward looking, seeing what's coming up the horizon, even though it's not a trend today, right? So what are some emerging trends you are excited about today in your work?
I'm spending a lot of time in, because I cover most of the healthcare side, in precision medicine and genomics. I think there's so much potential in knowing a person's right makeup, from a DNA perspective, from my family history perspective, and then feeding that into care for that person and thinking about things like preventative medicine and
Yeah.
preventative health. That's
Mhm.
fascinating to me. So I'm spending a lot of time thesis building in that area. I think that thinking about SMB infrastructure and scaling these companies up, we often go back to the stat that 1 in 4 businesses in the United States, new businesses, is founded by a Latino. How do we empower those founders to have all the, tech stack and solutions that they need to help them function and, operationalize their business in appropriate ways with technology? So that's another really important trend. And then we're constantly thinking about in the future of workspace, how do we empower the gig economy and make sure that they can really scale up their individual businesses as well and think about things like scheduling to booking to financing. So those are areas that I think we're spending more time on, especially in fund two. And then on top of that, the statingly obvious, how AI is affecting all these spaces and thinking about, workflows and automation and, sitting on a bunch of data trunks. It's all really fascinating. And so we're really going deep on all these areas.
No, you're right on trend also because AI is in everything, which means you need not be an AI company to adopt it, or if you don't adopt it, you are left out of the game in a couple of years. So it's good to get that focused in every sector. Doesn't matter it's an AI or a non-AI company. But you also mentioned there is quite a lot of interest and advancement in genomic trends, so that's great as well. And the gig economy you mentioned, so many of them are solopreneurs. So you're
Yes.
not going to be building something for someone with a 20 people team or a 250 people team. You're going to be building for one person who's trying to scale, right? So really great trends. Thanks for sharing that. So want to go a little bit into your fund as well. So about VamosVentures, right? So you support pre-seed, seed, and Series A startups, and especially all the sectors we have spoken at the moment are little bit capital intensive. So how do you balance that, supporting founders in early stage who do not have much traction, but you're also trying to fund a capital intensive project which may not return the benefits within few years?
Yeah. I think our value add, and especially at the earliest stages, is a few different things. It's ecosystem and community. That's one. It's operational expertise. That's two. And then it's introductions. On the ecosystem and community front, we have our founder summit every year. That's when we bring our portfolio companies together. And every year the founders come away with, that was so awesome that I related to so many founders with similar
Yeah,
backgrounds and experiences. And it's just a rare opportunity for them because every day they're building and they're kind of in their own little bubble. Um, and there's a lot of synergies in our portfolio. And so founders in our portfolio reach out to each other all the time, being like, hey, how did you do this? Or how did you do that? And we have both, again, early stage founders, to your point, who are probably, more inexperienced, let's say, in the founding journey. And we also have founders who have done it 3 or 4 times before at the later stages,
yeah,
then coach these early stage founders. So that's one thing. The operational expertise, I mentioned Andres and his fintech background. We also have Xavier on the team who comes from healthcare operating. I have experience on the founding side. Marcos has experience on the founding side, right? And so we can talk the language of early stage companies and founders. And the last piece is introductions. That is introducing them to potential customers. That's introducing them to, investors at the series B, C, and D. We develop relationships with folks in the community who not only care about this stuff, but who can help and support and grow our companies. And so at the earliest stages, it is a lot of hand holding and being a shoulder to cry on. And sometimes the value add comes from like having a really difficult conversation with the founder and bringing them back to reality and or them bringing us back to reality. Um, and I think that's something that shouldn't be lost at the earliest stages. Yes, it's important to make sure a company and founder is successful to return your fund, but don't forget that human element of it. And I think that's where Vamos Ventures really excels.
yeah. I tell everyone, and I'm an angel investor and a venture capital investor myself. So I tell everyone, don't forget the human element, the relationship that you want to build. Especially when I introduce two of my founders in my portfolio, they come up with something where they can partner together and complement each other and bring something to the market, which I had not thought about. So it's good to bring your portfolio once in a while, like the example you gave with the Founders Summit. And later on, when we wrap up, you can tell us if it's open to public, how can people reach out to join that and all that stuff. But I just know that we are coming right around time. So one quick thing I want to ask about VamosVentures is what is one unique thing that differentiates you from several other funds? There are a lot of Latina-focused funds, diverse funds, FinTech funds, future of work funds, health funds. What is one thing that differentiates you? And then how can people get in touch with you and VamosVentures to pursue that?
Yeah. What differentiates us is, we take the approach of, and thought leadership and our connectivity and partnerships and introductions and, ecosystem building. I think that's part of our secret sauce too. But I think the main thing is we're on your side as a founder. We do have a fiduciary duty, right, to manage capital and
Yeah,
capital and make money. But again, going back to that human element, we're friends. We're friends as
yeah,
well, and we get it. And I think that comes from all of us being from diverse backgrounds, from Latino backgrounds. Half of our investment team are women, and we get it. We get all the nuances and struggles that comes with being a diverse founder in this environment and outside of this environment. So I think that's what our special sauce is. And you can see and talk to any founder in our portfolio, and we have deep relationships with them, right? Both professionally and personally. How do people get in touch with VamosVentures?
yeah.
Well, we like to make venture capital accessible, and we don't like to be a black hole. So we have on our website a founder's form. If you're a founder, you can apply to be considered for investment at VamosVentures. It's a short form, basic information about the company. We like to get connected with people on LinkedIn, so feel free to add any of the investment team on LinkedIn. And then email. I'm just ashley@vamosventures.com. I'm always happy to chat. My schedule is a little crazy over the next couple of weeks, so don't mind me if I answer. It might take me a little bit, but I always get back to folks. Again, it's just ashley@vamosventures.com.
Thanks so much, Ashley. And then you mentioned rightly the human element. One of the things I've noticed is once you are connected with the investor, the founders are hesitant because if they share a problem that the company is facing, the founder is thinking that the investor may not be receptive or supportive. But if they are able to share with you the day-to-day challenges beyond just the positives, then it's a good thing for you as an investor because the founder is transparent. You can handle problems ahead of the cycle than finding out too late in the game for both of us, right? So that's actually great to know. And I'll share all the contact information also when the episode publishes. Is there anything else you'd like to share with our audience before we wrap up?
A couple of things. I would say if you're a founder, resiliency in this market is so important. There are going to be many bumps in the road, and this is just one of them. It's a challenging fundraising environment. It's a challenging environment to build a business, but be adaptable and pivot, as we discussed early on in the conversation. If you're an operator and are thinking about, what's next, or this area of startup and venture really, interests you, again, also be very resilient. It's a hard time for venture recruiting. Funds aren't really as active on the recruiting front, but there is light at the end of the tunnel. I'm hoping by the end of this year, more funds would have raised money and are going to hire and, be out there more. It's just all a cycle, right? And if you can ride the waves, there's opportunity with the waves. So I guess that's my parting thoughts. And listen, I want to make this world accessible. I want to spend time with folks who are passionate about impact and returns and venture and startups. Consider me a friend and a resource.
Thanks, Ashley. Yeah, exactly. So when times are turbulent, the founders, the investors, the operators that ride the wave come out much more stronger and resilient. So just hang in there and continue your mission. Great message. Thanks so much. And thanks for taking time to talk to us. And I'll share with our community all your contact information. I hope to stay in touch. Thank you so much.
Much.